Hey everyone, and welcome back. A lot of the focus is always on the usual markets, but what if I told you one of the single biggest economic transformations in modern history is happening, like right now in India? So the real question is, how can you as a US investor get a piece of that action? Well, over the next few minutes, we're going to break down the numbers, the drivers, the risks, and the exact tools you can use to get into this market.
Okay, so let's just dive right in. Why all the buzz about India? Well, it really comes down to some absolutely staggering numbers that are putting the country on every single investor's radar. These figures tell a story, and it's a story of explosive growth.
First up, the digital revolution. India's digital economy is projected to hit a massive $1 trillion by 2030. A huge part of this is something called the Unified Payments Interface, or UPI. The best way to think about it is like a public utility for instant payments. It's brought hundreds of millions of people into the formal economy, basically creating this huge, frictionless, digital-first consumer base from the ground up. It's incredible.
Next, let's talk about people power, because this one is a real game changer. Get this, a stunning 43% of India's population is under the age of 25. Now, that's not just a number on a page, it's a youth boom. It means a massive, dynamic workforce is coming online that's going to drive consumption and innovation for decades.
And finally, we've got the headline number, GDP growth. According to the IMF, India's real GDP is forecast to grow by 6.5% in the 2024/25 fiscal year. I mean, come on, that makes it one of the absolute fastest-growing major economies in the world, and it's all being propped up by really strong domestic demand.
So you see these numbers, and they're pretty compelling, right? But for an investor based here in the US, trying to buy individual stocks on the Bombay Stock Exchange, well, it's complicated, and it can be pretty risky. So how do you get access to this growth story?
For most of us, the answer is an exchange-traded fund, or an ETF. It's basically a single investment that holds a whole basket of Indian stocks, which gives you instant diversification. But, and this is a big but, not all India ETFs are the same. So let's break down how you actually choose one.
As this table kind of lays it out, you've really got a few strategic choices. So think of Type A as your broad market approach. This is an ETF that holds a huge range of companies across sectors like finance and tech. Then there's Type B, which is more targeted. This is for when you have a specific idea, like you want to bet big on India's fintech revolution or its manufacturing boom. And finally, Type C zooms in on the smaller companies. Now, these are higher risk for sure, way more volatile, but they also offer higher potential returns. The key thing to remember is you have to align your choice with your own investment goals and how much risk you're comfortable with.
So we've seen the numbers, and they're impressive. But now, let's look under the hood. What are the actual engines driving this growth? It really boils down to two really powerful long-term trends.
So the first engine is what's called the demographic dividend. The IMF says harnessing this is absolutely crucial for India. In simple terms, this is what happens when you have more people of working age in your country than non-working dependents.
And this analogy just nails the point. Think about it like a family whose household income just skyrockets when all the kids finally grow up, get good jobs, and start contributing. This massive wave of productive workers is a powerful, powerful tailwind for economic expansion. That is India right now.
Okay, the second major driver is a global strategy called China Plus One. You see, as geopolitical tensions rise and supply chain risks become more obvious, global companies are actively looking to diversify their manufacturing hubs so they're not totally dependent on China.
It's that classic saying, right? Don't put all your eggs in one basket. That's exactly what's happening. And India is emerging as a top contender for that plus one basket. The best example of this in the real world is Apple, which recently assembled a record-breaking $14 billion worth of iPhones in India. That shows you this strategic shift is happening right now.
But of course, no investment comes without risk. And a smart investor always looks at the other side of the coin. So let's play devil's advocate for a second and look at the potential problems, drawing directly from what the IMF reports are saying.
This slide lays out the three big risks to keep an eye on. First, you've got geoeconomic risk. Things like global trade disputes or sudden U.S. tariffs could really hurt India's exports. Second, there are financial risks. As a U.S. investor, if the rupee fluctuates against the dollar, that can eat into your returns. Plus, after the strong run it's had, some argue the market valuations are getting a little high. And third, there are internal hurdles. To keep this growth engine firing, India has to continue with some pretty complex domestic reforms. These are real challenges you have to be aware of.
So after weighing this incredible potential against some very real but manageable risks, what's the key takeaway for you as an investor? What's your next move?
The India growth story is, without a doubt, one of the most significant economic narratives of our time. It's being driven by these powerful demographic and geopolitical shifts. And while the risks are real, the long-term potential is it's hard to ignore. To stay on top of global economic trends just like this one, make sure you subscribe to FinAnatommy, and you know the drill, hit that notification bell for our next explainer. And just before we go, a quick but very important reminder, this explainer is for educational and general information purposes only. It is not investment advice. You should always consult with a licensed financial professional before you make any investment decisions. Thanks for joining us.